Wallstreetbets. I'm sure if you were at least a little in the loop during the COVID-19 pandemic, you've heard of this moronic yet impactful Reddit page. In particular, the GME pump and dump scheme was widely covered in the media, which was basically when a group of Redditors on this Reddit page all collectively agreed to pump up GameStop stock in order to make money and also screw over the hedge funds on Wall Street who had a huge short interest in the stock.
I'll teach you to laugh.
If you go on to this Reddit page today, you'll still find a plethora of degenerate behavior and finance bros picking the new meme stock or shitcoin that they're going to supposedly take to the moon. Founded by Jamie Rogozinski, Wallstreetbets is the online platform for Main Street, a group of traders and everyday people trying to get rich and win against the Wall Street giants. Essentially, what this Reddit page is it's a group of these individual retail investors coming together to talk about trading stocks, options, and other stuff related to finance. And sometimes what they will do is they will pick a stock or security to pump up and then dump to make themselves a lot of money. But this is unregulated, so it's kind of a gray area when it comes to whether this is illegal or not.
Did they do that?
Something that is commonly talked about on this subreddit page is options trading. And this is because options trading, if you can still call it that at this point, is a high risk, high reward situation. And the people on Wallstreetbets want to get rich quick and drive Lambos, so this is quite perfect for them. Furthermore, it's pretty simple to understand, so even the biggest tool on the internet can buy a SPY put, and when the market tanks, he can think he's an investing guru. The reason there was so much more activity and new people coming into the markets during the pandemic, many sadly being introduced to the markets by a greasy Redditor with a crippling gambling addiction, is because during the pandemic, starting in early 2020, everyone was staying at home and had some money to play with due to their stimulus checks, $817 billion in total just within the United States. And what snowballed this was the media covering this phenomenon of meme stocks and retail traders making a fortune and beating the big institutions on Wall Street.
On TV and magazine covers. There's fancy suits, he's fancy haircuts. John Gotti. John Gotti.
Don't give me that shit. I didn't ask to go public. You know, they shoved their goddamn cameras and microphones in my face.
From late 2019 through to mid 2021, when stocks had a massive dip and subsequent rally, small options trades increased by 224%. Now, options trading used to be dominated by huge institutional investors, with only 15 to 20% of options trades from 2009 to 2019 being considered small, meaning 10 contracts or lower per order. However, this hit 40% in mid-2020 and has stayed relatively high ever since. Of course, many of these small trades did make a lot of money due to the higher risk associated with options trading and the volatile market during the pandemic. However, most lost all of their money and blew up several accounts.
I declare bankruptcy!
In total, $1.1 billion was lost for retail options traders, and ironically, much of their money went to the pockets of the big firms on Wall Street. In particular, 3 firms dominated this new big influx of options trading and accounted for around 85% of it. And these 3 firms were Citadel Securities, Susquehanna, and Wolverine. Now let's look into why these losses were so high. First off, let's point out the obvious. The people trading these options are uneducated, sheepish, and didn't know what they were doing. They were not speculating or trading, they were gambling. And some won big, however, the majority lost. A lot. Most of the trading was at the money options, or slightly out of the money call options, which could bring much more of a reward. Only 4% of the total volume of options trading was deep in the money options, which have tighter spreads on liquid stocks, meaning they are safer bets. And of course, safer bets don't make you as much money and are not favored by idiots on Reddit.
Go big or go home.
It was mostly call options being traded because stocks continued to soar and few believed they would go down, so put options were not so popular. What's also interesting and a testament to the gambling and uneducated nature of the trading was that around 50% of the total trades expired in less than a week of purchase, which had an average bid-to-ask spread of 12%. The bid-ask spreads were even worse for the out-of-the-money options, which accounted for 24% of all options traded and had an average spread of 28%. With these high bid-ask spreads, once traders bought the options, they were already down a lot of money. For example, some of the smallest trades made were $250 or less, which were 14% of the total trades, and these trades had an instant $59 loss upon purchase. In total, from November 2019 through to June 2021, $4.1 billion alone was lost from these bid-ask spreads on these options. Many brokerages widely promoted their commission-free trading services, however did not disclose that there was also built-in losses associated with option trading.
What?
It's gone. It's all gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
Well,
Lastly, another way trades lost money was they did not exercise their call options prior to the ex-dividend dates. What this means is that they did not buy stocks through their call options at the time when they could receive future dividends, and the cutoff date is called the ex-dividend date. This benefited the option writers on Wall Street who held the stocks and did receive the dividends, since their option holders did not exercise their right to buy the shares. So I mean, it's clear with all this hype on Wallstreetbets with getting rich off of call options and beating the Wall Street firms, billions of dollars were lost and many left the market with their tails between their legs, which is probably for the best. Many tried their hand in the stock market during the pandemic, and fortunately it was often with extra money they received from the government as opposed to their savings. Either way, option trading is still widely discussed on the subreddit, and the same old groups of idiots trying to get rich are explaining their million-dollar plans and investing strategies. Be educated before entering the market at all, but especially before trading options because they are very, very risky. And I guarantee you if you're not educated, you will lose all of your money trading these securities. I hope you enjoyed this video and maybe had a good laugh at Wallstreetbets, which is always fun to do. This video is also educational and should teach you not to follow the crowd and be cautious when it comes to investing and doing anything in the capital markets. For more content from me, subscribe to my channel and also check out my Instagram and Twitter pages. Thank you for watching and have a good rest of your day.